Yo, yo, yo! Welcome back to another episode of Momo Trades. Today's video is going to be about the only three trading rules or factors that you need to consider when using price action techniques in day trading. I'm telling you, just following these three simple rules will lead to incredible success and several trade opportunities each and every day. And as you see, who doesn't want to be a day trader? I'm without a shirt. It doesn't even matter. I'm day trading without a shirt nearly every day because that's who we are. We don't need to go into work. We don't need to go to the office. This is who we are. This is what we do. And let's show you how. So, this is actually a chart from July 1st, just a few days ago. The reason I'm using today's date is just because there was a lot of price action on a day like today. And we're going to go over several different trade setups. So in price action, we always want to look for second entries, failed second entries, but always in the right market context. So that means in an uptrend, we only want to look for second entries long or failed second entries short. If we're in a downtrend, we want to look for second entries short or failed second entries long. And we're going to get into that in just a second. But another thing that comes with market context is also the signal bars. We don't want to just take any second entry or failed second entry. It has to be at a certain key entry point, like a touch of a trend line off the EMA, or it has to have a great signal bar and a great setup with the overall market context of the day. So the market right now is obviously going down and up, and what we want to do is always draw our trend lines just to see what really is going on. The rules with these trend lines is that once there's a break of the trend line, a test at a new low, then we expect to see a reversal or at least congestion. So right now we have this downtrend, a break, new low. Now we can start looking for long entries or potential second entry shorts that fail. Now this is in the overnight session, so there isn't a lot of trading going on right now, but nevertheless, this price action does work no matter the time of the day. So if we're counting from this low here, we're going up and we have a first entry short once this bar right there breaks below the red one. That's first entry short. We get out of the EMA, strong bullish momentum. Let's draw our short-term trend line. And we have another touch of the EMA. Here's the second entry short forming. If this fails with a nice signal bar, we want to take that trade. Now, this trade is a little bit risky for a couple of reasons. First of all, we can see that there's a lot of congestion right here, and we'd be going into a potential midline, but also there is the possibility that you might get stopped out because the signal bar is below the EMA. But just to show you guys how effective this method really is, because it's a failed second entry short as well as a second entry long, if you're coming from this high, first entry long, second entry long, that does look like a nice trade. Now we have a break of this short-term trend, a new high. So what does that tell us? We might be looking for a potential reversal. We also can see that the trend did kind of continue on, but we had a break and a new high. Now, we had a double top, a push, an attempt by the bears to go below the EMA, a first entry long, second entry long right here. As we see, if the next bar breaks above this one, that forms a second entry long. Now, this is a trade we would not take because, first of all, there's this short-term downtrend that we're still looking to have a new low before a long entry. Also, there was already a break and a new high of this uptrend, so we don't want to look for longs anymore unless it's a very, very, very nice setup above the EMA with a great signal bar. As we see this signal bar here, not only is it below the EMA, but look how many bars are stacked up. So that comes with rule number 3. You only want to take these entries in the right market context. This is not a great market context. The trade before was a pretty good market context because it was also a failed second entry short as well as a second entry long, and also we were bouncing off this resistance, so as we see, that trade would have worked out nicely. Now we continue lower after we had a break and a new low of this short-term trend. So what do we expect to happen? A potential reversal. First entry short, second entry short, failure if the next bar breaks above this one. However, we're not touching the EMA. Even though it's a bullish bar, we should probably skip that trade too. Now, once we do see a new high, a first entry long, because this bar actually barely ticked above that one, and we have a second entry long, you could take this trade right there. However, the signal bar isn't great once again, and we're only looking for the 99% probability trades. It were to work this time, but we never know how reliable it really is when you're not taking trades with the great signal bars. Now, as we're zooming out and we're seeing what is really happening in this market, we're going from the highs to the lows to the highs again. So to me, this is starting to look like a potential trading range. So what do? We expect to see a test of these highs, and once we reach these highs, we expect to reverse. Once again, we can see that there's another second entry long here. Here's a new high, here's a first entry long, and a second entry long. Now, once again, we only take these entries in the right market context, and because these bars are so stacked together, I would skip this trade as well. Now we reach these highs of the day, we test them once more, and we start to reverse. Counting from this new high, we have a strong push below the EMA, a first entry long, followed by a second entry long failure right here with this doji bar. However, because we have a doji, I would also skip that trade once again. Now we can start looking for potential second entry short setups if the downtrend continues. Once again, we zoom out just to give us a better idea of what is going on in this market at a grander scale, and we end up pushing out of the trading range. So at this point, we have to start thinking, okay, maybe there's an uptrend starting to form. Once again, we have a new high. We're going down. We have the first entry long, a second entry long at the EMA. However, this would violate our third rule of only taking these entries with the right market context. Once again, we have a downtrend that we must respect until we have a break and a new low to think of long setups, even though this wider channel does take precedent because we have so many bearish bars stacked in a row, and this signal bar is once again kind of in the middle of the EMA and not very bullish. I would skip that trade as well. It is very good to learn from these entries though and be extra picky because that's how you're going to be profitable at the end of the day. Now, we have a break of this trend, a new high, and we begin to reverse. Now we can start looking for more short setups. Once again, we have a new low, first entry short, second entry short, but we would use this bar, this bullish bar as the signal bar because it's the highest bar in the swing, and that trade went without us because the signal bar was no good. But like always, let's start to draw a potential downtrend. We always want to draw the trends just the most accurate as possible, whatever fits the most price action compared to any other trend lines. We could draw a trend line that looks like this, but at this point, we're not for sure that this is valid because, as we can see, a lot of these bars are stacked up, and what might be the more likely scenario is that we had this shorter term trend that was steeper, a break and a new low, and a potential reversal. But we also have to just see what the next set of bars tells us. And as we see, we're in a strong downtrend. So now we can see that the wider trend does look pretty valid to me. Now, we always want to adjust our drawings to fit the most price action possible. And to me, it looks like this is a wider range and we're reacting to this midline several times. So all that does is just tells us in our head, okay, this is the context going on, so we can look for the right trades. Now, we have a new low, we have a first entry short, and another second entry short. This is going to be a very, very good trade to look at because as we see, there's a second entry short that formed once the bar breaks below the previous one. So we had one leg up, first entry short, another leg up, second entry short. The second entry short forms after this bearish bar. However, because this bar is higher than this bar, it's one tick higher, we can't use the bearish bar as a signal bar, and we must use the bullish bar as the signal bar, which means we'd have to skip this trade because the signal bar is no good. And let's take a look at if you put your sell order one tick below this signal bar, say you use this bearish bar as a signal bar, you would have went short at 3771.75 and you would have needed one more tick to ensure that you got out of your trade because it went for a 1 point scalp, but usually you need 1.25 points so that your entry can tick through. So most likely is that you would got stopped out of the trade. Now, we see that there's the break, a new low of this downtrend, and we see that there's another leg and another leg and another leg. So once again, we want to adjust our trend line to whatever is the most accurate possible, which to me, it looks like that. Look how many times it's reacting to this trend. These trends are very, very powerful, and because we're only trading on price and no lagging indicators, they are essential to our trading method. Now, we have to be aware that we're getting to these lows and we might bounce out. We have a strong push above the EMA, a first entry short, followed by a second entry short failure if we go long above this bar. Once again, we didn't have a break and a new low of this downtrend, depending on how you had it drawn. So we're not looking for longs yet. Also, these bars are stacked up and it looks very congested. So once again, even though there's a failed second entry short that forms, it's not the great market context yet, so we have to skip this trade. Once again, we have a lot of indecision in the markets, and sometimes you just have to wait and be patient for a setup like this. Now that we can see we're obviously making higher lows, higher highs, we can look for a second entry long, which happens right here. Here's a new high, first entry long, second entry long, boom. That is a nice looking trade to me, and it would have worked out. Once again, let's draw a potential trend line. Just to give us a little bit more context once again. Now we can see that we have a break, attempt at a new high, which leads to a lot of congestion, followed by a lot of bearish momentum. Now it's safe to say, okay, we can look for potential shorts, but as always, let's draw our trend line. Break, new low, and some more congestion. We can see that after we draw this short-term trend once again, we have a break, a new high. So that means the uptrend is potentially over and we can look for a reversal setup. We have a push below the EMA. We have a new high, first entry long, second entry long. If the next bar breaks below that, that would be a second entry long failure. Perfectly off this short-term downtrend. And that is a very nice trade to me. And it would have worked out for a little bit more than a scalp. We would have gone short at 7,550, 377,550, and it went all the way down to 3,774. So you could have had a couple extra ticks to spare. Now, once again, let's keep in mind that we're in the greater trading range, and notice how we're really just in the middle of the trading range and bouncing above and below the EMA. So we always want to draw these short-term trend lines just to be on the right side of the market. Let's see what happens when we draw this one. We have a short-term downtrend, break new low, attempt at a reversal. New low here. Let's take a look. New low, first entry short, followed by another leg up, second entry short, failure. If we go long above that, very nice bar off the EMA, incredibly bullish bar. That is a nice looking trade. Now we see a lot of bullish momentum. So let's draw another trend line. We have a break, attempt at a new high, first entry long, almost a second entry long, but because this bar did not tick above that, we must skip the trade, and for good reason. Even though this looks like a failed second entry long because new high, first entry long, second entry long, it's really a matching high, and it didn't break above that, which means not a lot of people are going to even go short below this bar regardless how bearish, which is why if you would have taken that trade, you would have got trapped. And we rally out of there. Once again, we have an uptrend, a break, no new high yet, but we have a new high here, a first entry long, second entry long, nice bullish bar, a little bit away from the EMA, but honestly, because of how accurate these short-term trend lines have been working today, I would take this trade. Now, once again, we have a new high of this short-term uptrend, and we can look for a potential reversal setup or short setup. But I really don't see one that looks very appetizing to me, and we're also getting towards the end of the trading day. We do have a failed second entry short here, a new low, first entry short, second entry short, failure. However, look how many bars are stacked up together, and we really look like we're just weakening the uptrend. So I would skip that trade, even though it would have been a very nice trade, but it's at the end of the day and there's a lot of volatility, so we should really just end the trading day there. Now, once again, keep in mind, only taking these second entry shorts, second entry longs, failed second entry shorts, failed second entry longs, given the right market context, given the great signal bars, off the trend lines, key entry points, and on the correct side of the EMA, depending on what the market is telling you, what the price action is telling you. Thanks again for tuning into another video. Subscribe, like, comment, whatever you guys want to do. Peace out.